see for yourself, red over black over blue is bullish. And, you can see the exact opposite takes place at a certain point on the screens. Well, the opposite takes place at this point here. You can see they all cross over here. And you can see that the story changes at that point. You see it? So when the story changes, we change. The idea is that from the sentiment point of view, the storyline at that stage is, let's see if we can start working offers into those top halves of the bracket. When the sentiment was negative here, positive at this stage, when the sentiment was positive in here, we could obviously start doing the exact opposite. Can we work into the bottom of the bracket during that period? And the idea, of course, is that that helps to position us for that sentiment storyline at the right prices. So this is what we talk about when we're talking about things like sentiment. Sentiment isn't just driven by one thing, it's driven by a lot of different parts. When the sentiment clearly changed in this area here, we knew that the whole entire concept of market maker frequency, probability distribution, had gone very bearish indeed. And you can see that as the movement starts to top out into these edges, it becomes a very clear sell side signal, ultimately resulting in what turned out to be an enormous $4,000 per contract sell-off. So again, it's just that idea of trying to apply that to the other sets of tools that you've got as well. Seeing that storyline, seeing the storyline against the wholesale price level called the 500s, knowing that the 500, of course, is a dealer's key level, and knowing that if we go sell side on a dealer's key level, this could be very, very dangerous. And then obviously using that information when we started to see that very slippy gamma this morning in terms of the NASDAQ, you just look at it and go, wow, gamma went very bearish off the gun, didn't it? So, when you're looking at the NASDAQ, for example, and you're looking at gamma, have I got gamma on this? Yes, I have. So when you're looking at the gamma off the gun, you can see what it did. I mean, gamma off the gun was very bearish, wasn't it? Became very slippy. So, trying to be a buyer against that gamma from the gun is almost impossible. And it's even still very difficult to be a buyer of the gamma narrative. The only chance you perhaps had to buy the gamma was on this break lower here when we got a little measured move. That could have been your only attempt at gamma buying in here, because that's the only time you really had a real money edge on the long side of gamma, didn't you? Now, the only downside of that trade was that by the time you tapped into this buy side liquidity here, the gamma's gone back sell side. And as the gamma goes back sell side, you can see that that just results in the retest of the back into the bottom edge again. When you look at it from a volatility, top of the market volatility point of view, you can see that that's also been pretty much sell side for the entire drop today. Very difficult to be on anything else other than sell side business. And again, the cash open allows us to see that. The cash open forms your initial price action bias, something we'll be covering in today's classroom, is to get that initial bias clear about what you want to be doing and how you want to be doing it. Simple, easy stuff. Lots of ways to approach it. Lots of ways we will approach it. But obviously, you've still got to get that first gut feel about what the market's doing and then take your read from that point.